We've done research to say how transformative could AI be, and I think it has the prospect to be more transformative than the personal computer. That does not mean, however, and that's for the next several years, that does not mean, however, that markets are not overvalued. I think the U.S. equity market, it's an uneven story. I mean, you have the technology sector that continues to run away, yet that sort of, I would label it euphoria, is not broad-based, and so it can break one or two ways. I think we can see some modest deceleration in the tech sector. At some point, that has to come. But if the economy holds up, I think other parts of the market could catch up, and I think that would be good news for the market.
But, Joe, do you think we're in a bubble then?
I would be reluctant to say that. I mean, valuations in parts of the market are at near historic highs. So history would say that we have prospects for lower returns in those segments of the market. But as I said before, Francine, it's not broad-based. You have small caps, not nearly as, euphoric in that sense as part of the large cap names that you've said. It's not on value-based companies. And so, again, I think it's an uneven picture. But I'm concerned of the momentum going solely into technology.
So what does that, again, what does that shake out? And are there adjacent, I guess, industries that could also, have a correction on the back of that?
Well, history shows that two things will ultimately happen. It's just unknown what the timing is. That with transformation, the very sector that benefits from the transformation still can become overvalued, even though if it changes the economy. And so I think that's what we will see with the technology companies. They're already discounting phenomenal growth. And also what history shows is that gap between, say, technology companies and the rest of the market, that will narrow in the coming years. But that's an annual 3 or 5 year outlook, not a 6-month play.
So, Joe, what's the right way of looking at a portfolio building? Again, there's not that many catalysts, I guess, for equities that are actually priced to perfection, and yet the rally kind of continues.
Well, I think you have to look outside of where the greatest momentum is. And now it takes a longer multi-year horizon, but ultimately you're rewarded. I think you're being rewarded less for the technology sector, despite its transformative ability. So that would say, outside of the U.S., and if you're in the U.S., don't forget other parts of the market that may not have as much of the headlines, but have a greater cushion for future returns.
So where? Because Europe is having wobbles.
Yeah. Well, I would actually say, it can get uncomfortable. But history shows you have to go where the discomfort is to benefit from what, finance people call risk premiums. So you go to actually parts of Europe, you go areas that have slower growth. Yeah. And for the U.S., I'm not picking on technology, but it's actually outside of technology that you don't want to make sure that you're underweight too much, because that introduces risk to the portfolio.